I remember building a business with my partner, Nate Short, at the time. Our company was called Oralis, and we were one of those dot coms in 99 that was a little different than most because we already had a online and bricks and mortar approach, and we were cash flow positive and growing quickly. And we had raised some venture money, and we were going pretty darn good. And looking at the Fed and looking at the bubble, we actually, at our board level, we knew that there was going to be a bursting of the bubble. We didn't know when, but in January of 2000, 2 months before the real implosion happened in March, we just decided we better take our chips off the table and sell. And we ended up getting a deal with VerticalNet, which in 1999 had been the highest performing stock on NASDAQ. And it all looked good and we got a great price, except by the time it closed in latter 2000, the stock price of VerticalNet had dropped from like 200 down to like 2. And so we were taking stock. So it turned out to be a really difficult deal because we thought we'd get the deal done in time and we didn't bank enough cash to walk away and take advantage of the opportunity. We had no real negotiating power. We put all our eggs in one hopium. I call that hopium. We were smoking too much hopium, thinking everything would go our way, and it didn't. And we didn't have a contingency plan. That taught me so many valuable lessons. I have a friend, Richard, who had been an investment banker, one of the best in the world that I knew, particularly in the mining space. And he saw an opportunity. He went down and bought a copper mine in Chile, and he built it up and raised capital, took it public. Like, everything was going great guns. They had great lines of credit in terms of bank availability to draw upon, and everything was looking great. And then in middle of 2008, the bank called them up and said, we're withdrawing all your lines, and they had no more access to capital. And of course, raising money out in the stock market was dead. So it really looked dire. But Richard, being the brilliant businessman that I know, he actually already had a contingency plan, and he'd already approached potential publicly much bigger mining companies, publicly traded ones, whose stocks just got decimated as well. But he had already had 2 or 3 that he had been in conversations with who might eventually want to buy this mine from him. And he just went to them and started talking and created an auction where he got the 3 bidding against each other and essentially structured a really unbelievable deal that ended up working out great for him because it didn't take long after the credit crunch for commodities like copper to go way up in value. So he was able to exchange his equity and his investors' equity in his copper mine for really low priced equity of these other much bigger mining companies at their low point. And then they rode that up. And those bigger mining companies had way deeper pockets and pockets of cash. So it was such a brilliant way out of a really tough situation where he created a lot of wealth, both monetarily, but health-wise, he was no longer having to go to Chile as often. He got to spend time with his family. He was able to finally relax because he had made it. So out of the toughest time, he created the most amount of wealth in all senses of the word. One of the most difficult and painful decisions I've ever seen anybody make, and myself have to make, is when we have deep personal relationships with employees who have been really loyal to us, who are really good employees, and we have to downsize. We have to conserve cash and batten it down. And so everything goes to what's absolutely necessary. And any of the people that we've hired for future growth prospects or anything like that, we've got to let them go. And it's heartbreaking and it's so difficult. It's simply one of the hardest things I've ever done myself. And I know it's been really difficult for some of my clients and friends who are entrepreneurs. And it really does come down to knowing what you need absolutely to survive the worst time, to get to slightly better time, and then how you can take advantage of the opportunity. But you have to have it all marked down in a plan, because when it's all happening, you're lost in the mix of it and there's so much emotion. So it's best to have a written plan. We have Wealth Creator Solution in our name, and we think of wealth much more than just money wealth. We think about it in terms of relationship and health and holistically. And wealth is a really important thing. We want to be wealthy in all things. I have a client who became a really good friend of mine who ran into some challenges with some partners where when they started, they'd all shaken hands, agreed to a set of core values of how they were going to show up personally and for each other and how they were going to grow the business and all the rest. And once the business was successful and they were making quite a lot more money than they expected, they were very successful. Some of the partners started not working as hard, not being accountable, and kind of mailing it in. And my client and friend was a competitor. He just wanted to hit that next brass ring and keep going because that's what they set out to do. They didn't just start it to make a lot of money. They set out to accomplish a mission. And he's a very mission, vision focused guy. And the way his partners were acting was just so heartbreaking for him because they'd become his friends. But he felt that no matter what he said and how he did it, he was letting them down. And ultimately, I helped him think that through and then negotiate a split where some of the business went with his partners and he kept some of it and he kept growing it the way he wanted to grow. And then a couple of years later, he ran into a similar thing with the remaining partners that came with him, where he just didn't feel like they were being accountable enough and getting it where they wanted to go. He just quite frankly just said, look, I can hardly sleep at night. I just feel so much angst of we're not mission focused. And so we talked about it and I agreed to help him prepare for a sale and hire the investment bank, walked him through how to negotiate with the investment banker and found a couple of prospective buyers. And I helped him walk his way through all of it until he got the company sold. And I structured it and helped him structure it in a way where he didn't have to stay on the earnout because of how we reoriented his title and his role well before we went to market. In the end, he and I speak pretty frequently. He's out spending time with his family, vacationing, traveling. He's enjoying the wealth monetary by now investing in his health. And so he's biking and long distance races. He's going on really interesting trips with his wife and available for his kids and grandkids. He's built a really wealthy, holistic life. Are the near-term prospects for the economy as uncertain as the media is sharing, or do you have a different perspective? Please let us know what you think in the comments below.